What is fundamental analysis? Unlike shares of companies listed on stock exchanges, most cryptocurrencies represent blockchain projects rather than traditional businesses. Therefore, fundamental analysis involves examining a wide range of available information about a project to determine whether the cryptocurrency has actual value. Fundamental analysis focuses on evaluating an asset's intrinsic value. It examines both internal and external factors to determine whether a cryptocurrency is overvalued or undervalued. Unlike short-term price predictions in technical analysis, fundamental analysis aims to assess long-term viability. How to perform fundamental analysis? When assessing the potential of a cryptocurrency, it is important to consider various economic, financial, and blockchain-related factors. These include macroeconomic trends, industry growth, projected profitability, and token circulation. Since fundamental analysis relies on subjective assumptions, its findings should not be considered 100% precise. However, it remains one of the most effective methods of assessing crypto assets, especially when technical indicators are unavailable. Let's explore three main categories of indicators that will help you conduct a thorough fundamental analysis. Project indicators. Project indicators provide qualitative insights into a cryptocurrency's purpose, structure, and team. These factors help evaluate whether a project has long-term potential. Team and developers. Assessing the project's core team, their experience, and past achievements helps determine their ability to deliver on promises. Early partners and advisors can also indicate credibility. White paper analysis. A project's white paper outlines its purpose, technology, and use cases. It also details token distribution, updates, and future plans. Independent reviews and audits can help verify the white paper's claims and detect inconsistencies or unrealistic promises. Tokenomics and utility. Examining how tokens are distributed and utilized provides insight into supply control and value stability mechanisms. Project roadmap. Most blockchain projects have roadmaps detailing upcoming test networks, feature releases, and long-term objectives. A well-defined roadmap with realistic goals increases credibility. Competitive landscape. Researching competing projects helps investors understand a cryptocurrency's market position and its ability to differentiate itself. Identifying a project's unique value proposition can provide insight into its competitive advantage. Financial indicators. Financial indicators provide quantitative insights into a cryptocurrency's market position, liquidity, and overall value. Market capitalization. Market cap is calculated by multiplying the current price of a cryptocurrency by its circulating supply. It helps gauge a project's potential for growth and stability. However, a high market cap does not always indicate strong fundamentals, as it can be influenced by speculative trading. Liquidity and trading volume. Liquidity refers to how easily an asset can be bought or sold without affecting its price. A higher trading volume indicates better liquidity, reducing price fluctuations. A lack of liquidity can lead to price manipulation and increased volatility. Circulating supply. This metric represents the total number of tokens available in the market. It differs from the total supply and fluctuates based on token emissions or burns. Projects with a fixed supply may have different value propositions compared to those with an inflationary model. Blockchain indicators. On-chain metrics. Blockchain indicators allow traders to analyze real-time network activity to assess the overall health of a project. Instead of manually tracking blockchain data, users can refer to specialized crypto analytics platforms. Hash rate. In proof-of-work (POW) networks, the hash rate measures the total computing power used for mining. A higher hash rate means a more secure and reliable blockchain. For proof-of-stake (POS) networks, alternative security metrics such as the amount of stake tokens and validator participation are more relevant. Active addresses. The number of unique blockchain addresses involved in transactions over a given period indicates network activity and adoption. Transaction value and fees. High transaction values indicate constant usage of the cryptocurrency. Meanwhile, Higher fees signal greater demand for block space. Why fundamental analysis works? Fundamental analysis studies the true value of a company or asset. Instead of focusing on short-term price movements, it evaluates financial health, performance, and future potential. This approach assumes every stock has an intrinsic value, and that market prices eventually align with it. How to make more profits by using fundamental analysis in trade? To make significant profit using fundamental analysis for trading, the core strategy is to identify overvalued or undervalued assets based on their intrinsic worth and hold positions over the long term, often supplemented by technical analysis for precise entry and exit points. This approach relies on thorough research into economic and financial factors rather than short-term price fluctuations. In conclusion, conducting a comprehensive fundamental analysis requires time, research, and precision. However, it allows traders to make informed decisions and better understand the long-term potential of a cryptocurrency. We hope this guide will help you analyze projects more effectively. Courtesy of the Universal Marketer in partnership with Profit Kit Masterclass Program and Crypto Mentorship Program.